Good morning. For Traders Exclusive, this is George Tkaczuk with RCM Wealth Advisors, reporting to you from the CME Group trading floor in Chicago. Well, I'd like to talk about the equity markets. The equity markets continue a correction, and for now, that's all it looks like. It's like a correction. It's not the start of a big bear market. Now, one of the things we look at to kind of tell us that we may be near a bottom is some of the contrarian indicators, meaning sentiment surveys have showed that people have gotten extremely pessimistic very quickly. For instance, we look at the American Association of Individual Investors, that's the AAII survey. The bulls dropped to only 21%, and the bears shot up to 48%. That's an extreme kind of reading. That's exactly the kind of reading that we saw in late December when the market bottomed in 2018. Similarly, the National Association of Active Investment Managers, the NAAIM survey, their equity exposure dropped from like 90% down to 55% or 56%, something like that. So again, an extreme thing. Everyone freaks out. Every time we get a little correction, the end is near and everyone just abandons stocks. Yet stocks are actually hanging in there pretty good. We also saw a rush to bonds, and also we saw the CBOE put the call ratio spike to about 1.26 one day at the end of last week at the end of the day. And actually this morning I was looking at it at about 1.3. This is not an exact science. It doesn't pinpoint it to a day, but these sentiment surveys, when everyone gets so negative, those are usually the times we get near a bottom. So it's probably going to happen sometime. Could be soon or it could be a week or two, but that's just something to keep an eye on. And also, we continue to see growth stocks that continue to hit new highs. Now, that's not the kind of bearish scenario you want to be in. These stocks are the ones that will tend to get hit the fastest and start getting killed, and those are stocks like Roku, SolarEdge, and these are not buy recommendations, but a stock like Advanced Micro Devices got hit after its earnings, quickly reversed to the upside. That's not the kind of thing you're going to see in a bear market, and it's trying to hit new highs going back to 2005. So those are just the kind of stocks you want to keep your eye on, relative strength. Take a look at those sentiment surveys. When everyone hates the market, that's the time you need to be buying it. Again, it's not a trade recommendation. Consult your financial advisors. But as always, that price and volume be your guide. This is George Tkaczuk, we're RCM Wealth Advisors, reporting to you from the CME Group trading floor in Chicago. Have a great trading week.